Hello, traders. Jeffrey here with you again for another week of review of our Forex trades and a look at what's coming up in the news this coming week. Let's go ahead and dive right into it. Before we start, as you know, all the information provided here is for educational purposes only and is not an offer or a recommendation to trade futures, stocks, options, or Forex. Do not trade with any money that you are not prepared to lose or put at risk. Know your risk tolerance and understand how to place trades on the different platforms based on your tolerance. Plenty of material on the website to help you understand risk and how you should be placing trades. And if you have any questions, please always feel free to get in touch with me directly. So let's go ahead and dive right into it. So here is how we did for the week. These are the trades that I posted on the private Telegram channel on Sunday evening Eastern time in the US. Sunday, Monday evening, Tuesday, Wednesday, and Thursday evening going into Friday. Total, as you can see, we were in the green every single day. Some days we had more trades that were good calls than others. But in every case, we always got our target number of pips out of our first target and then looked to put runners on for a total of over 1,400 pips for the week if you add the target one and the runners up. I always put sample lot sizes down. You should be trading with your lot sizes and your risk based on the actual currency pair, which I go into detail how to calculate on the site. But as an example, if you are just getting started and you want to be ultra cautious, this is the minimum extra ultra small lot size that you can trade of 0.1 lot, nano or micro lots. And if you traded every single pair and got similar target results, then you netted a little bit over 100, but you were also putting no more than 100 or so at risk for the entire week of trading if you're moving from sim into trying how real dollars work. At 0.1 lot, a micro lot, well over $1,000, and half of a full lot, over $5,000 for the week if you total everything up. Now, this past week, we had a lot of interesting news. Let's jump into a little review first of the strategy before we do anything. For all of you who have seen my trading style, you know that with currency pairs, I always look at the parabolic movement, the wave-like movement between pair prices when they are at their low going to their high. I watch for movement from the bottom edge of the envelope, this channel that we look at, up toward the top. I also put that in context with supply and demand zones and overbought, oversold conditions. So for example, we had a long bias on this particular pair. We waited for a reversal or a retracement down to the low of the channel. Ideal when it goes outside of the channel, and sometimes you'll get a little triangle indication or notification here, and then watch it slowly move up to the upper side, okay? In this particular case, the trade was called right about this time. This is the 7 p.m. time on the East Coast. We were watching for a retracement. When it was oversold, got in right over here and rode it right back up. So this was the area of the trade right here, looking for this pair to go overall long, wait for the retracement, and long back again. So we're entering on a 30-minute chart. We watch for price movement to the edge of the parabolic channel or to one side of it. When we get it outside of the channel, that's extra positive, but we always want to see it coupled with a supply or demand zone to bounce off of and be in an oversold or overbought condition. And then once we're in the trade, we can follow. You can either do just a single target and set it and forget it, or put a second target on and automatically attach either a price trailing stop to it or an indicator trailing stop to it. We've been experimenting with both. The opportunity to put a price trailing stop on it and then let it run through the Eastern time overnight and then pick it back up in the morning and follow it manually sometimes can give better moves, and I'll show you how we did that. Now, getting to the calendar, as I said, this week on Tuesday, we had some CPI news out of Canada, and we were following that. A little slow through the middle of the week. We are in the summer slow period. But we did have some manufacturing information out from Europe. And then we started to pick up dollar news with U.S. unemployment claims, manufacturing in the U.S., and then towards the end of the week, a big driver in the market when Powell spoke out at the Jackson Hole FOMC Fed conference. So these were all things that we were monitoring to see whether or not there was and how much impact they had on the global U.S. currencies, particularly when the dollar is affected and the news is coming close. We always want to be able to get out of any trades before the actual release of news. So make sure that you are setting your clock, setting your timers, setting your alerts so that you're not going to be inside of a trade when a big news event hits. Huge volatility can often stop you out and continue on in the direction that you were expecting, but you got stopped out because you were in the trade. So better to get out of it, and if the price continues on afterwards and it still looks like a good trade for you, by all means, you can get back in. Now let's go ahead and do a review of the week's trades, and let's take a look. Okay, so here is my NinjaTrader platform, which I like to use to be able to attach runners to indicators, but you can certainly trade off of MetaTrader as well. I do the same thing with attaching price runners, and I'm working on some opportunities to do some automation in NinjaTrader as well. So first trade of the week on Sunday night, the New Zealand dollar, US dollar. The trade projection came out right about here, 7 p.m., okay? We were looking for a long, but did not want to get right into it until we had a pullback, which we got right about here, okay? Took until early in the morning and then had that nice run all the way up. On the Australian dollar, Canadian dollar, it was a nice straight shot long all the way through, okay? We got right in over here, close to where we made our call. And then first target was hit easily, and then just followed that runner up until we got right over here, a manual closeout later in the day on the following day, on Monday in the New York session. On the short side, we had the dollar yen. Here is the 7 p.m. period, and as we got right in here with a perfect pullback right to a supply zone, we had a nice drop through the Asian session. Keep in mind, when you're trading with a yen pair and even the New Zealand dollar, Australian dollar, the Sydney and Tokyo sessions often see a huge move that is countered when London opens and then again can be reversed when New York opens. But in this case, we caught that nice Sydney and Tokyo short move down, got right out at our target, and then rode it all the way back up till we got a little bit more out of our runner until it finally flattened out for the day. Next, on the following day, we had a couple of calls. Here is the 7 p.m. period when I released the trade. Looked for a pullback right to a nice demand zone. Beautifully oversold right over here, okay? This is a textbook case. We had our nice pullback. We had a long bias. We had a nice pullback, oversold, got into our entry, rode it up to our target. At that point, when it became overbought, certainly we could have seen another dip down and up, but in this case, the market held fast, and we stayed in it all the way until the afternoon of that following day, and then manually closed our runner out. So Huge move all the way back up. Australian dollar, US dollar. Again, we had a long, got in our pullback entry, and got right out up with our target and runner close to about the same period during the first couple of hours of the New York Open. Now on the pound New Zealand dollar, we saw a short bias. Obviously, we're coming right down. We got right in over here close to when our trade was released. And in this case, because there was so much in the way of supply zones right above us, took a market entry and then rode it right down to our target and let it run down to our runner, okay? And in this case, again, as you can see, manual runner, we watched that trade all through the day and just kept moving with it on 15-minute candles, okay? And in this case, usually putting a target behind the previous one or two candles is an easy way of following it through the day. Let's see, next. We had a number of trades on the next day, okay, going long right over here. Did not get that nice pullback entry. Going short right over here. Did not get right in at the market. Got a nice pullback entry. Took a little bit of heat. Finally turned right back around. But you can see the overall bias is down. Took us out right at our targets and our runners just as we were looking for. Okay, next, same thing. Beautiful move, pullback during the Tokyo and the early London session, and then through London and the New York Open, our nice run down. Just what we were looking for. So again, we're looking for our pullbacks in the Tokyo and sometimes the Sydney sessions, and then a follow through on the London and into the New York session. Here's the pound Swiss franc, and we finally got our pullback here, and then a quick run down to our target, and then right out at our runner. Australian franc, then over here we were really quite flat through the entire overnight period in the Eastern time zone, but then by 7 a.m. finally hit our entry area, and through the remainder of the London market and into the New York market, had our nice run down. But our overall bias of being short after a flat period overnight took off through the following day. Canadian dollar and yen. In this case, we had a pullback in our target and then a nice run down. So just be patient for those pullbacks, and they usually come through, okay? And when your risk tolerance is smaller, trade smaller lot sizes, okay? Gain a confidence level with these pullback targets, and don't put your trades on and don't take the trade unless you get close to your target. And by the way, the targets are not, entries are not set in stone. The charts are dynamic. So supply and demand zones easily move around throughout the few hours after the trade bias is released. So you can make adjustments to those areas, and I do sometimes, or just enter at market. The other factor to take into account is the spread. When the spread is very wide, you may have to make an adjustment on the target or you won't get filled, and you'll be kicking yourself, oh, I was greedy for a few points to get in right at the very edge of a zone. So give yourself a nice a bit of breathing room to be able to get into your targets. And last trade, the Canadian dollar and franc. We had our nice pullback here, and this is a beautiful spot right here. We were already overbought. Got an outside bar, easy to get in, and just ride it right down, okay? So again and again and again, in hindsight, it would be easy to say, oh, if I got in over here, we could have ridden it right down. But these trades come out way before, okay? I'm projecting where this is going based on my analysis, looking for the pullback and the overall movement of the currency based on the currency strength when the trading really kicks in the London and New York sessions. Now let's see, as we get into the next day, we only had a single trade. I believe this is Wednesday night into Thursday, the pound dollar. And in this case, we had a nice move up. We were looking for it to go long, got our pullback, oversold, jumped in, got out, and out 1, 2, 3 in the early morning hours, and banked some pips right over here. And then to finish the week off, we had a bunch of shorts. No, we had 3 longs and a short, if I remember. So the pound Australian dollar, we had a nice move up. We had a pullback, grabbed our targets. This was reversing a little bit, but at least we got in and out for a small win. On the pound yen, this was a nice clear trade as we got right in over here for our entry, took a little bit of heat, and then retraced, okay? So you basically give yourself an insurance policy. The first step is always understanding the bias. If you just follow my bias, you do well. If you play the odds and in sim take every single trade, you'll see following my bias puts you in the money. And then you just have to wait for best entry point, and pullbacks usually are them, and you will really, really maximize your profits that way. The dollar yen, as we got in over here, this was actually a limit order on the entry, pulled back up, got in our first target, and then straight out on our runner. And then switching to the last of the week, which was a short, we actually were stopped out over here. The bias was going to go short on the pound Australian dollar. And as you can see right over here, we had that news out of the Fed, which drove the dollar down and the market up and pushed this trade in the opposite direction of the dollar because that went down straight up. So we were fortunately out with a nice tight stop and only sacrificed a few points or pips. So that is a review of all of the trades during the week. As you can see, we were in the green on almost every single trade, every single day. One small loss right over here, but generally following the pullbacks and the entry points and the areas of the targets and the runners really maximizes your profits and your take home. Okay, thanks for being in the recap again. If you have any questions, feel free to email me. If you have any questions about the program or being able to join or getting in or any of the promotions that we're offering, just shoot me an email. You can go right to strategicdaytraders.com if you want to take a look and see some more information, get more information about the trades and the plan, and see all the different areas of information for members. And that is a wrap. I'll see you in the next one, and good trading.